now we do all 50 states, which is really nice. So if you have a referral, someone that goes to Arizona, the nice thing about the Arizona is that I actually work at Arizona, so that is direct. But let's say someone from California is saying it's too expensive here, I'm moving to Florida, I'm moving to Texas, Colorado, Utah, Oregon, Idaho, all these really famous states right now that people are moving to from California, we can do those loans. Julie and I can do those loans as well. So just keep that in mind. I'm getting a lot of people that are moving out, so I want you guys to feel like, hey, so-and-so, I was working with them, but they want to end up buying in Texas, and you're going to refer them to the ROG office over there. That's fine. No problem, we can still do the loan for them. Really? In all the states, New York. I'm just giving out the ones that are popular right now that most people are moving to. So that is one thing. Second, if anyone's moving to Arizona, just call me. I do direct loans there, and I work with the Realty One Group office in the Mojave County area. So if you want those referrals, I know that a lot of people refer out to other ROG offices. There's a ROG office in the Mojave. There's actually two. There's one in Kingman and there's one in Bullhead. Bullhead is right across Laughlin. A lot of people, when I say Laughlin, a lot of people, know where that's at. So just in case you guys get any referrals for that, let me know about them, because I do them direct and I live over there, so I'm able to help them directly through the office out there as well. Okay. Any questions on that, on the 50 nifty states that Calibre does? No? Okay, so Calibre, obviously we do the normal stuff, right? We do your VA, your USDA, your FHA. We do your normal conventional, your jumbo loans, and your renovation loans. Have you guys worked with anyone that has those renovation ideas on renovation? No?
Actually, yeah, I'm working with a seller right now, and they're thinking about renovations they want to do.
Okay, so we do them. We do both, where there is several options. There's the normal FHA, which is called the 203K loan, and then there's your normal conventional loan. One nice thing that we just came out with on the renovation loans is if they qualify for it, they're on the conventional side, they can actually do, instead of having what we call a contractor, they have to get a contractor. They can actually now go to the big box, what we call big box stores, like your Home Depot, your Lowe's. If they can go to Home Depot and Lowe's, get quotes for the things they want to renovate, like their kitchen or their bathroom or their tile or their flooring, or they want to paint the walls and get someone to do the work there for them. Now they can just go directly to them. They can get work orders from them, and then we can loan them that money, and they get the work done through these what we call big box loans. And I say Lowe's and Home Depot because those are the big stores that offer those type of services. So I wanted to also let you guys know about that there is other ideas for people that might not qualify for your $450,000 or higher homes. Maybe they can qualify for less. They have to get themselves a fixer-upper, but they're able to do the whole HD TV thing if they want to. That is available for them. And I believe that the max right now is between $100,000 and $125,000 for renovations, okay? But it could be smaller. Most people need about $50,000, $60,000, right, to at least get the basics in. If they want new flooring, if they want paint, if they want tile, or some fixtures, new cabinets, new bathroom, whatever, the sinks, toilets. So they are able to do that. I'm just kind of broadening your guys' situation in regards to those tough buyers, because I know you guys got a lot of buyers. I know you have that. It's just that most of them don't qualify right now, right? Most of them either don't have the money or don't qualify because they don't make enough income to hit $450,000. So that's why I'm saying there's these loans and options for lower amount of homes, so they have the money, so they can at least make the house decent, right? I'm not saying that they're gonna make it like beautiful, like super beautiful and a brand new inside, but at least decent where they can feel like, okay, this is home. Okay, any questions on the renovation loans? No, we're good? Okay.
So is the renovation loans, you mean it's gonna be almost like a refinance or cash out on their house, or it's gonna be a brand new loan for them to purchase something?
So there is the refinance renovation, you can do that.
Okay,
But the one I'm talking about is the actual purchasing. So let's say a house is worth it's a $350,000 home, or $325,000. But it needs a lot of TLC, right? Because I think California right now with 300,000, they're pretty bad. They're not the greatest. So we can try to get a renovation loan for them, so they can have between $50,000 to $100,000 to be able to provide them so they can renovate the house. So give it the renovations, at least the renovations it needs. For example, like your normal, like your flooring, your things to make the house look decent to move in. Because that's what a lot of people I feel they're dealing with. People that can't qualify for the $450,000, you can do the renovation loans where they can go in lower, but yet have enough money so they won't feel like, oh my God, I can't buy this house because, everything's falling apart. There's holes in the walls. It's in 1980s cabinets in the kitchen, 1980s tile, it's horrible. People are just selling these homes as is. So that's the reasons why. I'm just giving another option for all those buyers that you guys have right now that are on hold because they can't qualify for a 450 or more home. Or they don't have the money for it either.
Would it be two separate loans?
No, it would be one loan.
Okay, okay.
Yeah,
Yeah.
so it would,
renovation.
so the way it
No,
works
we buy
is
that money.
between 40,
That's
about
okay.
45 to 60 day closing. Regardless, if the work is not done yet, we still close for the seller. So
Okay.
the seller will get their money, which is whatever they were selling their house for. Let's say the house was selling for $300,000. We will pay them, and then the rest is paid to the contractor.
Okay.
That's why, so the contractors, another thing, just FYF, we go the contractor way, is the contractor has to be licensed and certified. It cannot be, Uncle Joe who knows how to do fixings around the house or knows how to do this. It cannot be like that. It has to act, unless Uncle Joe is an actual licensed contractor and has all the works and all that, then that's okay. I'm just saying that a lot of people, they have their aunts and their uncles and their cousins that might know how to put the flooring. The other uncle knows how to do the plumbing, but it doesn't work that way. It has to actually be a contractor that's licensed. Yes?
The rate, what's the difference, the rate between one and the other one?
There's really no difference. It's the
Okay.
same rate.
It's
Rates
the
are
rate.
high right now, of course. They're not in your twos anymore. And so I want to help you guys understand. I've been working with Solomon for many, many years in this sense. I shouldn't say many, but several years. And I was in a market, when I first started doing loans in 2018, the interest rates were at 4% and 5%. A lot of people don't realize that or don't remember that. But when I was actually closing my very first loans on my first year, it was in the 4s and 5s. People killed for a 4.25. So me going back, coming again to this year and this market, to me it's normal. I'm like, oh, we're just back in 2018. And that was only a few years ago. Again, this is an education for your borrowers, or your buyers, I should say, I'm sorry, I call them borrowers. For buyers, what you have to help them remember is that the reasons why the interest rates went so low was because of COVID. COVID did all of that. And really, that really benefited homeowners. Why? Because everybody refinanced, right? Everybody that I closed in 2018, 2019, all refinanced with me when 2020 hit and COVID hit. Why? Because all of those people, I had locked them at 4% and 5%. So we were able to bring them down to 2.25%, 1.95%, some people. So that is why I'm letting you guys know that this is technically a normal market. This is where we should have always been, because we were there 2018 and 2019. So keep that in mind, that you don't sound crazy. You're not like trying to lie to them. You're not. That is what the market is. So right now the interest rates are what they are. Even if a person has great credit, even a person with 850, if they can lock at 6.25 right now, and the only benefit that they have is that they don't pay. They don't have to pay what we call a discount fee, or to buy down the rate. okay? But if you have anything below 720, you're gonna be paying. So you're still locking, you're locking like at 5, on FHA, you're locking at 5.25, 5.5, and they're paying. That is the benefit. So right now, that's where we're at. However, keep in mind that if we're able to qualify them conventionally, now they've opened up the ARM rates. You guys remember those ugly ARM rates? Nobody likes them, but they're actually not that negative if I explain them to you guys. So ARM rates were very popular in before 2008, before the market crashed, right? The mortgage industry crashed in 2008. Do you guys remember what an ARM rate is? Right, it's fixed for a minimum amount of time, and then it goes into adjustable after a certain amount of time. But keep it in mind as another option for your buyers, and also your listings for people that are selling their home and they're trying to buy another one. And they don't want to pay the 5.7 because they're still so fixated on the 2.5 or the 2.3 that was back in 2020. So let them know now that they're, we have the option has opened where there's called ARM rates. And ARM rates are a little bit, I don't want you to think they're in the 2s or 3s, they're more in the 4s. But yet it's lower than your 6 or your 5.75. And it's fixed, there's options between 5, 7, 10 years. So most people, if you guys were educated from the beginning when you guys were first training, you guys know that most people live in their homes the most, 5 to 10, 5, 7, 10 years. This is the reasons why ARM rates are 5, 7, and 10, because most people sell their home or move out of their home within that time. It's very few the people that actually live in their homes 30 years or more. So all these people want the fixed rate for 30 years, but the reality is that most people sell their homes way before that. So it's just, again, it's a psychological thing, right? People want to feel that their rate is not going to move and they don't have to worry about it, okay? So keep in mind that other option for your buyers that are hesitant, that now there is, and they're not so negative. People get scared, and the reason why, because of what happened in 2008. You got to remember, most of everybody in 2008 or before, everybody was having loans that were all ARM, that's why there was such a crash, because people were trying to refinance. Right before that time, they were doing it in 3 years, and this is what clamorated, I should say, and brought the 2008 crash down for mortgage business. So keep that in mind, guys. So just to answer your question,
Thank you.
It's the same. And then ARMs, again, they're not FHA. So FHA via USD doesn't do them right now, but conventional does. There is that option. So that's why I said if they qualify conventionally, they have the option of doing an ARM rate if they want to go that route. We do have down payment assistance programs. We do work with them. We work with Calibre, we work with Golden State. Depending on the state, other states like Arizona, they also have their own. They have one home down payment assistance program. Depending on the area, like in this area, the state agencies are Calibre and Golden State. They're still doing them, but right now, not a lot of them are available. And let me just tell you why. The reasons why is because the interest rates have gone on a free fall since February, right? We've seen how they've hiked since February to now, to today, how much they hiked. So right now, on a normal person that's locking in, let's say just a normal FHA or normal conventional, their interest rates are locking, depending on your credit score, between 5.5 to 6.25, right? That's where we're locking. Down payment assistance, as you guys know, is not that exact same rate. It's a little bit higher. Why? Because the state agencies they're going to charge higher on the interest rate because they're financing the down payment assistance. So it's a little bit higher. So interest rates were up at 7% with down payment assistance. So obviously what was happening is because they were so high, a lot of people weren't qualifying. The maximum debt to income ratio is 45% on a down payment assistance with the state agencies. Now, I do broker out, so Calibre also brokers out to we work with partner lenders that have specialty programs. I've actually got one down payment assistance that is not through the state agency, it's through the lender. And the way it works is that it follows the FHA, so it's still an FHA program, but how they assist is just the down payment. So the 3.5% is assisted. The closing cost though has to come from the borrower, okay? So everything has to come from them. Now, is it available? I have to double check. I don't think it's available this week because the interest rates went up again this week. So it might be on hold, but once we level, which I'm hoping we level by July or August, these programs will be made available again, for the assistance. So any questions on down payment assistance programs? No? Okay, we keep going. It talks about the steps in the mortgage, but I know you guys know that already. Do you guys know what the difference between pre-qualifying and pre-approving is? Okay, so let me teach you guys about pre-qualification and pre-approval, what the difference is. So pre-qualification is basically an estimate. So we take the application, we look at their credit, we review their income based maybe on a pay stub or two, or if we can get an instant verification of income, we base it on that. That's a pre-qualification. It is not a pre-approval. Okay, that's where, that's the difference. Pre-qualification is basically just getting an estimate to see where they are at and how much the possibility that they can afford. Okay, a pre-approval, that is when they actually submit all of their documents. After we've done the application, after we've done the pre-qualification, they submit their documents. And then we actually start checking what they said on the application actually confirms on paper. Or is there changes? So Calibre is very big about when we submit an actual pre-approval letter, it's a pre-approval letter. The pre-approval letter is actually stating that I, Melissa, looked at all the documents and confirmed that what the application is correct, and these are the numbers we've come up with, and this is the possible pre-approval. And we actually submitted it through the automated underwritten system, which we call the AUS. Remember how we asked for the DU? You guys get the DU? Mm-hmm. So that's running it through the system. And that's after we received all the forms. So once we've done all of that, then that's considered a pre-approval. So there is a difference. A lot of people don't know that. They think that it's the same, but I'm like, nope, there's a difference. There's a pre-qualification and then there's a pre-approval. Okay, any questions on those? No? Okay. So I'll keep going. There's a little page of the factors that can affect your home loan's interest rates. That's a nice one to show your buyers and your sellers. Just something nice to be able to help them to understand the factors that can. And right now, it's good to show them that because, everyone thinks they can qualify, by the way. Every person I've spoken to, like yesterday I got a call, she wanted to qualify for $450,000, but she only makes $2,800 a month gross. And but in her mind, she can qualify. So that's why it's good to have these things, these tools to be able to help them. And it helps us a lot when you guys are able to talk to them about certain things about the loan, about the financing. It's okay because you are able to kind of filter them out for not only yourself, but for me too. Because you're able to see if they really will qualify. Right now, you've got to be making $80,000 or more, and that's with just one car payment and maybe a couple credit cards. Okay? So if your borrower or your buyer wants to buy a house, that's wonderful. But if you have to ask them, how much do you make? So one thing I learned when I was working first with Solomon, it was like when I was on those appointment calls, I would ask them, how much do you make? What's your income? Why? Because we need to know. Are they W-2 or are they self-employed? That's another major thing you want to know. Okay? So right now, for a $450,000, you have to be making minimum $80,000 to $90,000 a year. Preferably $125,000 a year. Okay? So if that person, one person, is not making that much, then ask them, Do you have others that can co-sign or go and live with you to help you, because that payment's gonna be over $3,000 with the current interest rate. So if you tell them that up front, you're gonna know right away. And then you save yourself a lot of time, especially when you're making calls like yourself.
Yeah.
But when you guys are talking, you know, if they're not listing, right, and they're not selling a house, when the sellers, I know they have money, it's easier. Because once they put that down payment down, their loans are like $250,000. So of course, most of them are gonna qualify. But when we're talking about brand new home owners, brand new buyers that are barely getting into the market, those are the ones that I'm talking about. They wanna buy a 40, I wanna live in Rialto, and I'm thinking, oh my God, that's like 500,000 right there. I already know. And you guys already know. You guys know the area. So you already know that it's 400, I think that's the minimum now, 450. So if they can't qualify for that, start asking them, do you have a family member or other family members, friends that are willing to move in with you or co-sign for you so you're able to afford it? And let them know. Right now, a $450,000 home is over $3,000 payment. That includes your taxes and your homeowner's insurance and your PMI. So just keep that in mind. It's easier, then you guys know, you don't waste your time. If they say, oh no, then tell them, okay, then that's my recommendation. If you want to buy in California, this is where you need to be at. You need to either find someone to buy with, or literally they're gonna have to move out of state to where it's affordable for them, okay? And this is just for brand new buyers. I'm not talking about sellers. Sellers, of course, we know they've got money because they're selling their home. And then it talks about small things that we talk about in when our conversations with our buyers. We talk about debt to income ratio. This is a good one because it helps people to understand how we're able to qualify them. There is a debt to income ratio maximum. For example, FHA maximum is 56%. So basically, 56% of their income is the max we can use to qualify them. That's it. And that includes their debts. So they're looking at, can this person make the mortgage payment and pay their bills on credit for that mortgage? So that's why a lot of people can't qualify for 450, because once they hit $3,000 and over on their mortgage payment, plus their car payment, plus credit card payments, student loans, all of that's on there, they can't qualify. They need additional income. And this is good to talk to them about. For conventionals, the maximum right now is 50%. Jumbo loans, for people that make more money, let's say people that do make $150,000, $200,000, those people, the maximum on jumbo loans right now is 43%. Okay, so keep that in mind for that. Escrow talks about escrow, title insurance, which you guys I know already know about this. One thing I like to say, out of all the things on my page, read about the do's and don'ts. This helps us a lot. The do's and don'ts for the buyers and the sellers too that are buying the next home. A lot of people can't get qualified right away because they do a lot of the don'ts. They close accounts, they start moving money, and then, and again, you can't blame them because they don't know, right? They don't know. They're just living their life, dealing the money the way they do. But when you are in the process and you want to buy a house, it's like we got to keep it strict. There's a do's list and there's a don't list. So this helps us. I always talk to them about this, but it's also helpful from the agents. It really makes both of our lives easier, especially when we're in a transaction. So that's the end of that brochure. Please keep them with you. It's like a nice little, especially like yourself, when you're on the calls, it's nice to be able to review that if you're talking about the mortgage. Keep it, and it's easier for you to understand, to be able to help them explain, and then you can redline them out, for the ones that you already know. Nope, they can't qualify. Nope, they can't qualify. So that's that. The next stuff that I was going to talk to you about, and I don't have the presentation here, I was going to talk to you about our smart loans. So we also do what we call non-QM or non-qualified mortgage loans. What are those, you might be asking? Well, those are for the people that, let's say, they're a lot of self-employed people. right? A lot of self-employed, like you guys are self-employed, right? You get a 1099 and you have to pay your taxes whenever you pay your taxes. But some people don't report all of their taxes, right? They just don't. That's how they manage their money. So they wanna buy a house though, but they have 20, 30% down, 40% down. How can they qualify for the rest of the amount of the loan? So these programs are available for them. From the bank statement loans to people who've had like bankruptcies with less than a year, maybe they had late payments on their mortgage, because those are things that normal conventional will not allow. They won't qualify them because of that. And then for also your investors, there is what we call a Smart Vest program. That program is really cool too, because that one doesn't even require taxes. You know, it just requires their credit and the money, pretty much. It's almost like what were they called back in the day? They were just basically loans that you never had to present any paperwork. They just went by your credit score and if you had the money and an application. And that's how it was qualified. These loans, of course, their interest rates are a little bit higher, but there is ARM rates available for these loans. But it's meant for your out-of-the-box borrower. So the ones that will not qualify on the traditional end, like your FHA, your conventional, your USDA, your VA, all of that. And there is different options. So if you come to me and you say, Melissa, I've got a guy or a girl that they're self-employed and they've only been in business 1 year. I don't know if all of you know, but when you're self-employed, you have to have at least 2 years of self-employed income and you've actually done your taxes and all of that. So some people are like, well, they just started 1 year, that's all they've done. We only have taxes for 1 year. There's a loan for that. But again, what's the catch? The down payment is normally about 20%. So that's why, because these are higher risk loans, right? These are people that were going in with very little. Other stuff like ITIN. We've got ITIN people. Wonderful. There is a loan for them, for ITIN, okay? But here's the catch. They need to have money. They've got to have at least minimum 20% plus closing costs. Okay, so you can tell them that. You can let them know, hey, if someone comes around for our people that have ITINs, that's the one thing that I like to say to them. And I like to educate the agents. I just like to say, ask them, ITINs are available. There is a program available for you, but it requires money. Do you have 20%? I want to buy a $450,000 home. You guys can do the math, right? It's going to be about almost $100,000 for the down payment plus closing costs. So it's another $10,000, $15,000 for closing. So that is the other program. If you've got someone that maybe DACA, we do people that may have, again, things that do not fit the normal box, let me know. Because if you let me know, we might have a loan for them. And if that loan is going to be able to help them. But just, this is the key. The catch is always, make sure they have the money for it. So all of these non-qualified mortgage loans, I call, or the special loans, specialty loans, these loans just require money. They at least need to at least check that they have 20% plus closing costs. If they don't have it, then don't waste your time. That's all I'm saying. Keep them on, we show them the love, but we just keep them on the back burner because you don't want to waste your time for that. Just can tell them continue to save money. The last thing that I wanted to talk about was the current situation that we're dealing with. What is Calibre doing to help our agents be able to, their current their buyers, to be able to get their loans or their offers accepted? Especially in a tough market that we're living right now. In a sense, it's tough only in a sense because we have a lot of people, right, submitting offers. So Calibre has committed themselves to now doing underwriting approvals prior. So instead of just a pre-approval, now we're allowing the underwriting approval. So giving that. If the person wants to do a loan contingency removal, obviously that's allowable as long as the person's okay with it. So make sure that all these people have money. They've got to have money. So if they don't have the money, then what you want to do is we can provide them the underwritten approval and you can try to submit it that way. we, on our end, we're calling the listing agents, we're doing videos for them as well, so we can help explain a lot of this to be able to help you get your buyers to be offers accepted. Any questions on that? No questions? No questions? Okay. What are your guys' challenges right now in the loan world with your buyers? Or listers or sellers that want to buy? Current challenges?
The interest rate.
Not what?
The interest rate
The interest rate, yes. So remember,
is changing all the
I
time.
told you about the ARM? There's that option now. That option. So if you fear talking the ARM, send them to me. I can talk to them on that. So we've got ARM rates. We've got ARM rates. So there's options out there for them. Any other challenges you guys are facing?
For most of the sellers that I talk to, they're just worried about where they're going to next
Right.
and how they're gonna get in it, you know.
Right. And they have the money, right?
Yeah.
They've got the money. So let them know, okay, so now, so there's another program that we partner with. It's called Zoom Forward, literally, it's called Zoom Forward. So the way this program works is the company, Zoom, goes ahead and basically unlocks their 80% equity of their current home that they want to sell, right? So it unlocks that 80%, allowing them for us to pay, so they pay the mortgage, the current mortgage, and then whatever the difference is, it's unlocked right away for them, so they can go and put their down payment for the next house. Now, they can do that, and they can use this program to allow them to upbuild, if there's needed, like if they want to. This is not something they have to do, but if the house needs paint, or it needs some type of small fixes so it can sell better, they will do it as well. And then they can, at the same time, they already have that money, they can unlock it, be able to buy the next home, right? And then not worry about this house. That house gets sold, and then they get that money, whatever the difference was for that. So there is that for your sellers that are worried about where am I gonna go? Because a lot of them need the money, right, from their home.
Yeah.
Right, so they're like, oh my goodness, I have to sell, but where are we gonna go? What if we don't find a house? What if we can't? So that's understandable. So that program is kind of like a middleman. They help that person unlock 80% of their equity, pay off the current mortgage, give them the difference, and then they are able to use that difference right away to buy their home. They can move and not have, and then their house will always get sold, but they don't have to worry about, oh, I gotta do a contingency sale, or I have to sell my house first so I can have the money so I can put down on offers. So we've got that program too. It's been a pretty popular program here in California because of that same challenge that you're talking about,
Yeah.
where people want to sell and move, but they need the money from their home. So they know they have to sell it, but then it's like, what if it takes us 3 to 6 months to find a home? And then where are we gonna live for the next 3 to 6 months? So that makes sense, and that's why we partnered with this program called Zoom Forward to be able to help those sellers move faster and not have to worry about, I've gotta have a contingency sale. Because we know that most offers with contingency sales are not being accepted, that's from my understanding. Maybe, I'm not saying none of are being accepted, but it's probably far few, like my down payment assistance programs, far and few in between, not much. So let me know if you've got those, you can tell them on the phone, no, we've got a program that can help you, and then you don't have to explain it, you can just send them to me.
Okay.
Or to Julie, because remember, Julie's also my other partner, we both work together in this team. We can both explain it to them. And be able to help in that sense. So that allows that challenge to help. Now the other part where they don't know where they're gonna go because it's too expensive, that's a hard one.
Yeah.
That's what stopped a lot of people from selling right now, because they already know that wherever they move, property taxes are higher, their mortgage payment might be higher, so, and a lot of these people are wanting to retire. Tell them, come to Arizona. They can go to Arizona and pay a lot of stuff out there for cash if they want to. So it's just, but we want, I want to give you guys opportunities to be able to get more listings too. And that program can help with unlocking that. Okay, so if you guys want, now if you want more information, I can send you more information about the Zoom Forward program.
Yeah.
I will send that to you. I have no problem in doing that, okay? So, and that I think can help unlock some of those sellers that you probably have been challenged with. So any questions on that? And we can always do one-on-ones too, so no problem.
Excuse me. And how long after closing the buyer can apply for refinancing, and what document does need? Is the same processing or
So the person, you mean if the person purchased and then they want to refinance?
for the new purchase? How long after that the buyer can apply for refinancing?
They technically can refinance right away, but some lenders, I understand, they want to wait 6 months. But technically, they can refinance right away. They would just have to go to another lender, probably to refinance. But most of the time, most lenders want to at least have 6 months. And the reason why, because they want to see 6 months of good payment mortgage history before they can assume that loan. Because remember, the lender's going to start all over again with a new loan.
Thank you.
Okay. Yeah, you're welcome. Any other questions? No? And then you guys have my information on the back. That last page has my info, my email, my cell phone number. I'm always available to you guys, you know, either through Zoom too or through the phone. Most of us are texting now. Most agents text. Everything's under text now. And that's about it. That's it for me. I brought some lunch if you guys want to eat. If you're hungry.
Thank you for lunch.
Yes.
Thank you.
No problem.
For Melissa.